Hey everyone, my name is Grant, and in this video I'm going to compare and contrast two types of accounting methods for recording manufacturing costs. These two types are job order costing and process costing. There's a picture of me. First, let's figure out why we need a costing system to begin with. These costing systems help monitor costs that are being incurred as production is happening. So if you look at a light bulb factory, for example, the company has to pay for the material for all the light bulbs, the wages of the people directly involved in making the bulbs, and also the cost of running the factory. These are all costs that need to be assigned to the products they affected so that when a light bulb sells, the business can say with pretty good certainty how much it cost them to produce that one light bulb or a batch of light bulbs. And once the management has these numbers, they can more accurately determine how profitable the company is. They take the revenue numbers from when they sell the bulbs, and they take the cost they figured out from whichever of these two systems they use, and they can figure out what their profits will be and make decisions from there. Ultimately, having these numbers is important for management because it allows them to look ahead and make decisions about the future. They can basically decide if and how production needs to change to better serve the company. So job order costing is basically for companies that produce small orders or products that are significantly different from each other. For example, if you need to make t-shirts for a family reunion or you want a customized pair of shoes, the companies you buy from will be using job order costing to figure out the costs they incur. I'm not sure if you can read this diagram, but it's basically showing that job orders use direct materials, direct labor, and manufacturing overhead for a specific job, and the costs of the job are completely unique to any other job the company has. Notice how work in process inventory has only one section because the job is performed until all the goods in the job are completed and transferred to finished goods inventory. So process costing is used for pretty much the opposite, when you have a large number of identical products being manufactured. Like the light bulb factory, for example, it makes more sense and it's much more simple to combine all light bulbs and assign costs to them equally since they're all manufactured the same way. The major difference between process costing and job order costing, as you can see here, is that process costing has multiple departments where products are in different stages of production. One light bulb batch might be in the shaping stage, another might be in the assembly stage, and so on. So with process costing, we want to separate costs incurred in each department because they may very well be different. Different departments might require different labor hours, the factory equipment might be more expensive to maintain, etc. The important thing to remember though is that the main difference between job order and process costing is in the work in process inventory section. They both use raw materials, direct labor, and factory overhead the same, and both end up with finished goods inventory, but it's the work in process inventory that separates the two. So here's a company, Grant's Custom Guitars, that's a good example of a company that should use job order costing. Every guitar they make is going to be different, so they should be costed for each individual job. Now, Nike making soccer balls, on the other hand, would likely use process costing because the balls are mass-produced and each unit can be considered worth the same as any other unit. Now, activity-based costing is another way of assigning costs, but this time it has to do with assigning them to activities they correspond with. First, it assigns costs to the activities that are creating the manufacturing overhead, and then it assigns the costs of those activities to only the products that correspond with those activities. For example, in the soccer ball factory, we could say that we have a certain amount of overhead that's a result of specifically the stitching process of the soccer balls. We assign those costs to the activity of stitching so we can figure out a rate of overhead per ball stitched or per batch of balls that are stitched. This is useful because you break down the overhead further and it becomes a more accurate and specific number. So next we'll go over equivalent units of production for process costing systems. So equivalent units of production are important because they deal with partially completed units that the company has laying around at the end of a period. So instead of recording them as work in process inventory, equivalent units lets you consider them in terms of fully completed units. So this is a question from the LearnSmart module that gave me some trouble, so I'm just going to use it to explain how equivalent units work. So it says a department begins the month with 100 units at a cost of $7,500 in goods in process. An additional 1,000 units are started during the month, and additional costs incurred are $12,500. At the end of the month, there are 200 units still in process, which are 50% complete. The ending balance in goods in process inventory is 2,000. Now, they gave the answer on the original problem. It was blank, and that's what you had to solve for. But basically, what's happening is you have 100 units to begin with. You add 1,000 more, that gives you 1,100 units, and you have 200 left over in goods in process inventory at the end of the month. So that means you must have completed 900 units. And now, if we're going to think about those 200 units that are still in goods in process inventory at the end of the month in terms of finished goods or goods that were fully completed, we have to use that 50% to say that they're not 100% complete, they're 50% complete. So we really only have 100 units instead of 200 units. So really the amount of units that we transferred out and these equivalent units of production would equal 900, the ones that we fully completed that are 100% complete, plus the 100, which we got from taking 50% of 200, that gives us 1,000 units that were fully complete. And now how we get the 2,000 for what's left in the ending balance in goods in process inventory is we take the total costs, that 7,500 plus 12,500, which gives you 20,000. So you take the $20,000, divide by the 1,000 units that we came up with, which gives you $20 per unit. And now you take that $20, we have 200 units that are 50% complete in goods in process inventory. So technically 50% of 200 is only 100 units. So we take those 100 units, multiply by $20, and that's how we get 2,000, which is the value of the units that are still in goods in process inventory at the end of the month. So that's all for today. I hope you enjoyed the video, and let me know what you think. Any feedback is welcome, and thanks for watching.